Are you ready for the biggest housing market shakeup since 2008? Buckle up, because I'm about to reveal why experts believe home prices are headed for a crash in 2026. Whether you're a homeowner, investor, or first-time buyer, this video could save you thousands or even millions. So grab your favorite beverage, sit back, and let's dive into the wild world of real estate. Hey there, financial freedom seekers. Welcome back to our channel. Today, we're tackling a topic that's on everyone's mind, the housing market. More specifically, we're going to explore why some experts are predicting a massive crash in home prices come 2026. So let's get into it. Now, before we start predicting the future, let's look at what's happening right now. You might have noticed that the housing market has been a bit, well, crazy lately. Some major markets are finally seeing prices drop, while others are still skyrocketing. It's like a real estate roller coaster out there. Let's break down some numbers, shall we? In San Francisco, the one market area has seen a 3% drop in prices. That might not sound like much, but in the world of real estate, it's significant. Other metros are also seeing price reductions as inventory increases. It's like watching a game of housing market Jenga. We're all waiting to see which piece will cause the tower to topple. But hold on to your hard hat, because not all markets are tumbling. Places like San Diego and Las Vegas are still seeing prices go up, up, up. It's enough to make your head spin, right? So what's going on here? Well, my friends, welcome to the wonderful world of real estate cycles. You see, the housing market isn't just a straight line going up or down. It's more like a roller coaster with peaks and valleys. Prices rise and fall on a pretty consistent basis due to things like seasonality and demand. Now, here's where it gets really interesting. Have you ever heard of the 18-year cycle? It's a concept that's been floating around in real estate circles for years, and surprisingly, it's been pretty accurate at predicting housing market crashes. According to this theory, we're due for another big drop around, you guessed it, 2026. But before you start panicking and selling your house, remember, this isn't a crystal ball prediction. It's more like an educated guess based on historical patterns. The housing market is influenced by so many factors: interest rates, the economy, population growth, and even unexpected events like global pandemics. Looking at you, 2020. Speaking of unexpected factors, let's take a quick detour to talk about something that's becoming increasingly important in our digital age: data privacy. You might be wondering, what does this have to do with housing? Well, more than you might think. You see, every time you search for homes online, apply for a mortgage, or even just browse real estate listings, you're leaving a digital footprint. And that footprint, it's worth its weight in gold to data brokers. These companies collect and sell your personal information to third parties, which can affect everything from the ads you see to the mortgage rates you're offered. That's why services like Koji are becoming more popular. They help individuals remove their personal data from brokers, giving you more control over your information. In the world of real estate, where every advantage counts, protecting your data could potentially save you thousands on your next home purchase. Now let's zoom back out to the bigger picture. If we're heading for a crash, where are we likely to see the biggest impact? Well, all signs point to Florida and Texas. These states have seen some of the biggest booms in recent years, which unfortunately means they might also see the biggest busts. Take Miami, for example. This sunny city has already seen an 11.2% drop in housing values year over year. That's a pretty significant decline, especially for a market that was red hot just a short while ago. But here's where things get really interesting. While we're talking about potential crashes and declining values, we're also seeing a phenomenon called shrinkflation in the housing market. No, it's not a new diet trend. It's when houses are getting bigger, but the average price per square foot remains the same. The result? Houses are becoming more expensive overall. Now, you might be thinking, wait a minute, I thought we were talking about a crash. And you're right. This is where the housing market gets really complex. While overall prices might be headed for a downturn, individual factors like house size and location can still drive up costs. Let's dive a little deeper into this shrinkflation concept. Construction costs are going up, but buyer affordability is going down. It's like a financial seesaw, and guess who's stuck in the middle? That's right, home buyers like you and me. So what are builders doing to address this? they're getting creative. We're seeing a trend towards smaller homes with fewer bedrooms, but with more optimized space. It's like playing Tetris with floor plans. For example, some builders are sacrificing primary bedrooms to squeeze in an extra small bedroom. It's all about maximizing every square inch of space. And you know what? This might not be a bad thing. Here's a hot take for you. Most home buyers and builders could benefit from using less square footage. I know the American dream has always been about bigger houses. But hear me out. Smaller homes mean lower property taxes, lower insurance costs, and lower utility bills. It's like putting your home expenses on a diet. Plus, with clever design, you can make a smaller space feel just as comfortable and functional as a larger one. Now let's get back to those housing market numbers. Despite all this talk of potential crashes and shrinking homes, the average home price has still risen 6.3% year over year. It's like trying to push a beach ball underwater. It just keeps popping back up. But here's the kicker. Inventory is increasing. More homes are coming onto the market, which typically leads to lower prices. It's simple supply and demand, folks. However, and there's always a however in real estate, there's a concern that lower interest rates could spark more demand and push prices even higher. It's like a game of economic whack-a-mole. Push down one factor and another pops up. So what's a savvy home buyer or investor to do in this crazy market? Here's my advice. And remember, I'm not a financial advisor, just a guy who's really into real estate. 1. If you're buying a home, plan to keep it for at least 10 years. This gives you time to ride out any market fluctuations. 2. Consider renting. In many cases, renting is cheaper than buying in the short term. Plus, it gives you flexibility if the market does take a dive. 3. If you do buy, don't stretch yourself too thin. Just because you can afford a big mortgage doesn't mean you should take one. 4. Keep an eye on those construction trends. A smaller, more efficient home might be a smarter long-term investment. 5. Protect your data. Use services like Kogi to keep your personal information out of the hands of data brokers. You never know how it might impact your future real estate transactions. Remember, the housing market is complex and unpredictable. While experts are pointing to a potential crash in 2026, nothing is certain. The best strategy is to stay informed. Make decisions based on your personal financial situation and always think long-term. And that's a wrap for today's deep dive into the housing market. I hope you found this information helpful and maybe even a little eye-opening. Remember, knowledge is power, especially when it comes to big financial decisions like buying a home. Before you go, don't forget to hit that like button if you found this video useful. And if you want to stay up to date on all things and tips on finance and investing, smash that subscribe button and ring the notification bell.